Good morning, traders. It is Sunday, March 31st. Happy Easter. I hope all of you are enjoying your 3-day weekend. As always, we start these videos off with a review of our previous picks. That's the only way that you're going to know how reliable this system is and how consistently you can find good trades. MSFT, that was a stock that I highlighted a week ago Sunday. I really like this consolidation right here and this breakout to the upside. MSFT, Microsoft, had also shown strength relative to other tech stocks. I still like this play. I like Microsoft. I think Microsoft's going to continue to head higher. It's got earnings coming up in about 3 weeks or so. Let's hover over the E in Option Stalker Pro. 423. So yeah, we've got a lot of mega cap tech earnings coming up. Microsoft has a tendency to rally into the number. So I like Microsoft. I just don't need to buy it right now. The market is not doing anything. Last week was one of the most dull trading weeks that we've had in a very long time. And you can see how this little breakout, we had a couple of bullish hammers, and I like that. The market had already been pulling back a little bit, but the stock tried to pull back and it rallied up. It tried to pull back and it rallied up. That told me that buyers were interested in it. But in a lackluster market, it's just kind of floated lower. The air has been let out of the balloon. There's no real interest right now in traders buying anything with the market going sideways. So if we take a look at what our strategy was and we go to a 15-minute chart, and I think that we were setting LRSI alerts on a 15-minute basis and on a 30-minute basis. So let's take a look at the 15-minute basis and see what the stock was doing and how we might have avoided this trade because, the stock was leaking oil. Not severely, it just was drifting lower with the market not doing anything. So why would we feel compelled to come in and buy this stock? Well, when we came in Monday morning, you can see a long red candle and a considerable drop in the stock from the previous close, which was 428.68, down to 421.61. Wow, okay, that's a $7 drop. It's considerable. That's the first 15-minute bar of the entire week. Okay, Pete told me that I should be buying this stock on dips. Well, right out of the gate, it's like, there's no volume in the stock. Okay, here we get our first LRSI alert right in here. You can see how it's crossing above the 20 mark, and the stock has not been able to get through the opening price. It has not been able to get into any part of this gap. All right, so do I need to rush in and buy this thing? I don't know. What's the market doing? Let's put up an overlay of the SPY. And you can see how the market also gapped lower and then it just flatlined. It didn't do anything all day, just moved sideways. So why do I need to be buying Microsoft? I really don't. Why don't I just set another LRSI 15 alert and let's see what happens on the next go round. So I take that SPY overlay off because the SPY didn't do much of anything all week. So we're going to take a look at SPY in just a second. And here we get our next 15-minute cross right in here. Okay, right here, we're getting another LRSI signal. All right, well, we're making lower highs for the day. The stock has no volume at all, and the market is as flat as a pancake. Late in the day, do I need to be buying Microsoft? No, I don't. Also recall that in that video, what I'd mentioned is that on each one of these subsequent LRSI drops, we would like this bullish cross to come and for this trough to be higher than the previous one. So the ideal setup, and the one that we're looking for, is you get your LRSI cross here, and this trough is higher than the previous one. And this trough is higher than this one, price-wise. So what we would like to see is that this trough here has a price here, and then the stock rallies up and it pulls back forming this second trough. And then when we get another bullish reading here, this trough, the price is higher than this trough. Is that what we have? No, that's not what we have. All right, reset LRSI 15 and see if it can recover itself. So now we get into the next day. This trough, is this trough higher in price than this trough? No, it's not. Stock is continuing to drift lower. How about this one? Is this price higher than this one? No, it's lower. Okay, I have no reason to start getting excited about Microsoft. And also, as the week is unfolding, we start realizing that, hey, the market is not going to give us anything to really work with here. Is Microsoft horrible? No, I would still be looking to buy Microsoft. But I need to see some signs of strength. I need to see signs that buyers are interested. Volume is horrible. You can see 1.0 vol below average, and that was true for the overall market as well. So let's take a look at another stock that I highlighted. This was on the live event from Wednesday, and if you haven't attended any of the live events, please make sure to do that. We have them on Wednesdays. They are about 2.5 hours after the open. Harry and I spend about an hour and a half answering your questions, the same questions that other people have, you're likely to have. We also post the recording to the live event on the website as well. So even more educational content than what you get out of my Sunday videos. So here we have the pick from Wednesday, which was Verizon. I really like Verizon. We've got a compression right here. We have a horizontal breakout. You can see there's a small little trend line breakout as well. I loved this price action on Wednesday through this compression. And on Wednesday, the stock was showing nice consistency. Grind, grind, grind higher initially in here. Now it did pull back on Wednesday. Our live event was right about in here, but by the close, it was able to preserve VWAP, and that's fine. That tells me, okay, the stock pulled back a little bit. Market was really lackluster. It did have some volume through the course of the day. I've got to zoom in for you to be able to see that. But yes, it had some volume coming into the stock. So, and you can see how on Thursday, the stock was able to, it gapped higher, tested the bid, and then really nice, consistent price action Thursday. So I like Verizon, and you can see on the daily chart, you know, this is the Wednesday live event, and the stock is performing. It's continuing to move higher, so I like it. The one thing that you'll also notice on the chart is a new feature that I've added. I'm testing it right now. So for those of you who have Option Stalker Pro, no, you don't have this, and you can't find this, but you will have it during the next version release. Every time I tell you about a new feature that I'm testing and I'm working on, I get 10 questions. Pete, I can't find this on my charts. How come I can't find it? What am I doing wrong? You're not doing anything wrong. I test every variable before I release it. And I see what the relevance is. I adjust it. I see if there needs to be certain circumstances where it's more effective than others. But the study that we're adding is historical implied volatility. So you'll be able to gauge how expensive or how cheap options are relative to where those implied volatilities have been recently. We don't have a lot of historical data for this. We've only got, in some cases, 3 months worth of historical data. In some cases, we have 6 months worth of historical data. But at the bottom of the chart, you'll see this jagged line, and these are the option implied volatilities. So for a stock like Verizon, you can see how the option implied volatilities are declining and they're less than 20. Anything 35, and this is a very crude estimate, 35 or lower, I'm going to be inclined to use option buying strategies because those premiums are very, very cheap. If the option implied volatilities are greater than 35, then I'm going to be leaning towards selling strategies, selling out of the money bullish put spreads. And I might also need to buy call debit spreads because it tells me that the option implied volatilities are very high. When I'm buying options, I like to go deep in the money. I like to give myself lots of time. This is a surrogate stock position. And when I do that, oftentimes those deep in the money calls are trading slightly over parity. And I might be able to buy 2 or 3 months worth of time. So it's a great way for me to leverage the stock. And in most instances, these stocks are not going to make dramatic moves. They're not going to be explosive. That's why the option premiums are relatively cheap. We also don't have to worry that the stock is going to drop $20 overnight because they don't tend to be newsy that way. So this will be a really nice indicator for us to have. And we're going to take a look at some stocks in just a minute. But Verizon, I like it. I think Verizon's got a really good chance to get back up to this high here, which is 43.21. So it's got about another $1.40 or so that it can move. And on a $42 stock, that's a really nice move, especially when you're buying these deep in the monies that are trading at parity. So you can see this trend line coming into play here. We've got nice movement towards it. I'd love to see it get through that level Monday or Tuesday. I'm not worried about it, but I'd like to see this momentum continue, and then it's got a really good chance of testing this high plus trend line. So Verizon, it's a nice pick. It's actually doing pretty well in a flat market. So let's take a look at what the S&P 500 is doing, and you can see we still have this really nice, powerful, upward sloping trend. But you'll also notice that we're starting to see more red candles in here. You'll also notice that this move was very, very strong, excuse me, very tight price action. And now we get the second leg higher, also pretty nice and steep. But this leg has actually been somewhat shallow, much more of a horizontal type move. And if you visually draw, you can see how the momentum is starting to wane. Okay, well, that tells us that there are some sellers. Not a lot of sellers, but we can't expect that we're going to have a go gangbuster market where we can back up the truck and expect that we're going to have huge gains. This type of move is very common off of a reversal. So you've got your downward sloping trend line here, and it's breached to the upside. When you have a trend reversal like this, because you've got plenty of upside, you're going to get that nice tight price movement in here, and it's going to be pretty explosive. That's why I was telling you in November, December, January, get long, stay long. This thing is going higher. But now we're starting to flatten out. So for the last month, 6 weeks, we've been taking it easy. We're like, okay, this is a really, really good run. We don't get many where we can just get in and ride this thing like a pony and get a lot of gains out of our trades. We don't have to worry about big market drops or any kind of major retracement because we've still got all of this momentum and this tight price action. Right now, we've got to be a little bit more careful. So we get a breakout after the FOMC statement, and then the market really had not been able to advance. When you get the breakout, you're going to have a bid check. But look, we're pretty close to that all-time high right here. So even though the week was very lackluster, we're going to a 15-minute chart, you could see here's the volume. So you've got the FOMC here, and this is the gap up on Thursday, March 21st. Look at the volume since then. on the SPY. The volume in the SPY was abysmal, with the exception of some window dressing, end of quarter type of portfolio adjustments. So on Thursday, not too bad, but price action went nowhere. I think that's going to change this week, though. I think we're going to have a decent market. I think that the unemployment report is going to come out very well. We're going to have ISM manufacturing, ISM services, major economic releases. They should all be good, and they should be consistent with the market rally. So look for good jobs numbers. Initial jobless claims have been excellent. There's no reason to think that the jobs report is going to falter this week. So I'm expecting decent round of economic news. I'm not expecting the market to rally on that news in particular. I just think it's going to be consistent with this market rally. Now, what I do believe is going to happen is that we're going to start seeing some buying going into Q1 earnings. Q1 earnings starts on April 12th with JPM. So you can take a look at JPM itself. Bank stocks have been very, very strong. And April 12th, so we are less than 2 weeks away from earnings season starting. And the bid for the market tends to strengthen into earnings season. So when we come back this week, look, we're not far from the all-time high here. We got this little breakout after the FOMC statement, which I also believe is bullish. Why is that bullish? Well, because the Fed was as hawkish as they can possibly be, and the market held up. So the Fed said, higher for longer, not what the market wanted to hear, and this breakout was preserved for about 4 days. Breakout, pullback, bid test, bid test, bid test, bid test. Okay, there seem to still be buyers, and these are all programs that run. They're testing to see how aggressive buyers are. And once they're satisfied that there are buyers, then you get the next leg higher. And that's what we've seen all along. And that is the pattern that you should be expecting. As a short-term trader, you have to think in terms of these cycles. So you're going to get a pullback. Everything's fine. Okay, we bounce off of AVWAP-Q. This is where you can be more aggressive. All right, I made nice gains on that. Had a 5-day, 6-day run. All right, well, given the context of what the market has done here recently, I shouldn't press my luck. So you get a little bit of a pullback in here. I think this was the FOMC statement and quarterly earnings. All right, we get almost a bullish engulfing candle here. Okay, hey, buyers still seem to be there. This is where you can make some hay for a good 3-4 days. Take your profits, see what happens. So now you get another dip. Now you get another dip. All right, support seems to be forming. Here, you're going to miss some of it because you're still kind of waiting for signs of support, but you've got a nice little move in here, and now all of a sudden the price starts to get more patchy, a little bit more choppy. Okay, now you're like, I'm going to hold off on buying dips. In fact, I'm going to just kind of see what plays out in here. And then we just get a lot of really poor volume days in here. Some choppy, patchy movement. We had the chance for the FOMC to maybe produce something. I think a lot of buyers were looking to get long on a dip on the FOMC statement. They knew it was going to be hawkish. They got a hawkish statement, but they didn't get a dip. And so when they didn't get that dip, they realized that, hey, you know what? I've got stock to buy. I'm just going to buy it now. And so they kind of rushed in, and we got this little dip in here. They're not worried about it because they're looking a year, 2 years, 3 years out, and they're putting money to work right now. So they don't care that the market retraced a little bit. They just know they didn't get a 2 or 3 or 4% dip that they might have wanted to try and enter. So they're going to enter in here knowing that the bid is still strong. The market's not worried that the Fed is going to be higher for longer, and they're allocated. And I believe that bid's going to continue to strengthen and stocks will continue to move higher. So, in the course of the next couple of weeks, I think we're going to get some decent price action out of the market. I'm looking for a new all time high this next week, and then some follow through heading into those earnings announcements. So, we're going to go through. I'm just going to pick one of my searches. This is one of my favorite swing trading searches is Pop Bull. And we're going to take a look at some stocks there. TGT is one, and you can see how we had this bullish flag formation. So earnings announcement, pulls back, tests the EMA 8, and gradually works its way back above AVWAP-E, tests it a second time, and now it's starting to lift off. It had really nice price action this week. This could be my pick of the week. We can see the option implied volatilities are fairly low in here. That's a good sign. The company has announced earnings recently, so we don't have to worry about that. So March 5th, it announced earnings, so we know that it's not going to have another earnings announcement until well into May. So we don't have to worry that we need to be in and out. So we've got fairly cheap options at a implied volatility of 27. We would be buyers of deep in the money calls on this stock. I like it. It's a little bit far from the EMA 8, and that is my only knock. I do like this horizontal breakout though. Let's take a look at the M5 here. So that's what it did on Thursday, and actually pretty decent with nice volume coming in here too. It's going to be hard for this not to be my pick. You can also see on Wednesday really decent volume in here. So when you're trading a stock like this is the other thing that you want to do. We come in Monday. Typically Mondays are a holiday hangover. All right, we've taken out the last 3 days of trading, and typically it takes a day or two for the market to recover. So you don't have to rush in and buy this. You can see the stock has a tendency to dip intraday. So even though the daily chart looks good, look at these dips. You don't have to rush in and buy this. You set your M5 alert for an HA reversal or relative weak, relative strong, or 3-8 cross, or LRSI M5, and those will be good entry points. So if you come in and you look at this LRSI M5 dip here, was this dip higher than this dip price-wise? Yes, it was, and Pete told me that's what we want to have. So this could be a good dip to buy. So this is where your entry point would be. Hey, we got another dip here on LRSI. See this trough right here? Ooh, is this cross right in here higher than this trough? Yes, it is. Hey, okay, this might be another good dip to buy. Ooh, look, LRSI right here. Yes, this is nice. Bouncing off of VWAP. Is this one higher than this one? Yes, it is. Okay, this might be a really good entry point. This is how you do it. This is how you trade. And we've got good volume. And here we've got nice relative strength. Checkbox, 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 checkbox. The more checkboxes you mark, the better your odds of success. So I really like TGT. That could be my pick. Even though it's a little bit away from the EMA 8, I still like the price action. Herky-jerky all over the place. No, I'm not going to be trading FSLR. And in fact, this long green candle, even though it was preserved, you can see it's got a bunch of these long candles that are oftentimes reversed. So I'm not interested in that. CVX, still pretty choppy. I do like the energy sector. It's got some major resistance levels here with these automated trend lines. So I'm not too crazy about that. XOM, also in the energy space. It's a pretty nice, powerful run. Energy stocks in general, this is a commodity, so they tend to be choppier. I would need to see some type of pullback in here. I'm not going to chase Exxon on that type of a move right there, I'm going to need to see a pullback on that because that's what commodity stocks do. So you have to know a little bit about what you're trading. This is not bad. This is FCX, basic material stock. Gold has been hot, but here you've got this big spike up, a little bit of a bullish flag formation in here, but otherwise a fairly choppy stock. So I'm not super interested in chasing a gold stock either. I could put up a chart of gold. Gold to me is difficult to predict, very short term opportunities. Um, you have to know when to get in and when to get out because the stocks will follow that underlying commodity. Same thing with energy stocks and oil. Nice little breakout here, trying to poke through the 100-day. Not of great interest to me. eBay. eBay is interesting. So we've got a downward sloping trend line like this that's been broken to the upside, well above a VWAP E, and a nice little bullish flag formation here. If we zoom out, we can see that eBay over time has not done a whole lot of anything. It's just kind of been floundering around. But this is a pretty dang nice breakout that we have right here. So I kind of like the fact that eBay and its resistance is way up here. I like this little bullish flag formation, and you can see that option implied volatilities at 27 are fairly low. This is not bad. There's your little bullish flag formation. Did the stock have any volume? That's the next question. A little bit. So we've got a little bit of volume in it. Not much though. And you can see that the price action on Thursday rallied up, compressed, but it was able to finish near its high of the day. Still not seeing quite the level of strength that I saw in TXT or TGT. Oxy, going to the daily charts again. Oxy, a nice breakout. Energy stocks look good. When I look at the different sectors, I can see that energy actually has some really nice strength in it. Retail also has some pretty decent strength in it. So here we've got KSS trying to move through these horizontal resistance levels. Not bad. Just going to click through because I want to keep this moving along. MRO. This is a nice breakout through multiple trend lines. So we've got 1, 2, 3. Let's see where those longer term trend lines come into play. This is what I call a balanced trend line breakout, meaning that the starting point, the end point, and the intercept are nicely spaced, and it's a longer term trend line. I'm going to be adding this to Option Stalker Pro as well. I find these to be very reliable trading patterns. And we've got the breakout, so it has room to run. I like MRO. MRO actually looks very good. This is nice strength here. We've got excellent volume on Friday. MRO, right now I've got to be leaning MRO or Target. And here we've got Amazon compressing. Doesn't look bad, but it's not one that I need to own right here, right now. I'm looking for something that's going to give you some nice follow through. We're getting into silver stocks. SU is an energy stock. KCG is a gold stock. So basic material stocks have been moving higher. So there is some strength in that sector. Let's take a final look and let's figure out what we want to do here. I really like this TGT chart. This is nice. You know, I just wish that we had a small pullback. So here are your marching orders. I am going to, and I mentioned to you, this stock is choppy. I've mentioned to you that Monday after a holiday tends to be relatively slow. So let's see if we get a little pullback, any kind of pullback that gives us an entry point. And we're going to use the M5 chart. So we want to see an M5 LRSI pullback. Now, because this cross was here, any pullback that we get is more than likely going to be higher than this. So we're kind of would be leaning into automatically having the pattern that I'm looking for. So maybe a 15-minute would give us a little bit more confirmation. Well, what does that mean? I don't get it. What do you mean more confirmation? Meaning that if we get a 15-minute LRSI dip, it could be more considerable. It's going to take longer time for that M15 dip to form. We're trying to get closer to that EMA 8. So an M15 dip on LRSI that is higher than this low right here, which is very likely. And that's what we want to have when that M15 LRSI dip and cross back above 20 happens. We don't want the stock ka-chunk, ka-chunk, ka-chunk down in here and then getting our LRSI cross. That doesn't do us any good. We want to see it happen up in here, and that will provide us with a nice entry point, and we'll consistently be making higher lows. That's what we want. I'd like to see some volume in TGT. I'd like to see this orange line, 1OSI, above 0 as well. And I don't want the bottom of the market to be falling out. So I'd like this scenario to play out. That's what trading is. You've got so many influences and so many variables. You cannot look at this two-dimensionally. It's three dimensions. There are all sorts of factors coming into play. Number one, I want to see the market show me some dang support. Why else would I need to buy? I'm not going to come in and buy when I've got the market as flat as a pancake. If I've got anything that tells me the market might be ready to move higher, then I'm going to want to start taking some longer positions. Stock like TGT, okay, maybe a starter position if the market's flat Monday, but then for sure Tuesday, Wednesday, I'm going to be looking for that market to show me that, hey, I can start adding to target because the market is starting to gain some momentum. It's starting to gain some footing. That's what I'll be looking for. So we don't want any big market gaps down on Monday morning. What am I looking for in target? I'd like to see some volume coming into play. I'd like to see that LRSI dip, and that will give me an excellent entry point to get long. How might I trade target? Well, I know the option implied volatilities are fairly reasonable, so I want to go out in time. So I want to go out as far as I can, and if earnings are on May 15th projected, why don't I go out and buy an option that's beyond that? Maybe the May expiration cycle will do that for me. And that expiration cycle is May 17th. And if I go in the money, stock is at 177. So the 170 calls are currently 980, 1055. Okay, so with about 2.5 months of life, I can go out. Well, actually, it's about 1.5 months of life, but these options are trading for, let's say we can get in at 1020. So they're trading about $3 over parity with a $177 stock. Okay, I'm going to have a nice delta on those, and I've got plenty of time for the move to unfold. And if the stock gets to $82, $83, these are going to generate a really nice return. A word of caution. And the one reason that I do not like putting option trades out there is because everybody comes in, Pete said that I'm going to buy the 170 calls in May, and those are the best ones I gotta have. And you pile into the same freaking strike price, and the market makers will gobble you up. Because it's 2 lot, 3 lot, 5 lot, 1 lot, 6 lot, 7 lot. All these little freaking orders, and what do they do with that? They lean on them all day long. Most stocks, the option liquidity is crappy, okay? So when you put Retail Joe in there and it's all these little odd lots, you destroy that options market. So this is an example. You can buy deeper in the money calls. You can do any strategy you want. You can buy April calls. You can buy June calls. You can buy the stock. Just buy the stock. You don't have the same problems when you buy the stock. The stock is infinitely more liquid than the options are. Infinitely more liquid. But as soon as you start buying options, you are always trading against the market maker. And they do not budge. And they spread those option bid asks a mile wide. So do not fall into that trap. It really pisses me off when I see a bunch of people piling into the same freaking option that somebody happens to mention. You've got the flexibility to trade anything that's out there. And if you're not trading what everyone else is trading, then you have a chance to work the bid ask. You can try and middle the trade. You can try and get a good fill. The other thing is that everybody piles in Monday morning. I gotta buy these right now before everybody else does. That's not what you have to do with this play. You've got to watch what the market's doing. You got to watch what the stock is doing. All the puzzle pieces have to come together. Only then do you even consider buying the options. So that is why I do not like recommending options. So please don't rush into these. Give the trade some time. I like Target. I really liked MRO. I think that's another excellent play that you could be considering. Above that EMA 8, so for that reason alone, I don't want to have that as my trade of the day. And I also did like what I saw in eBay. I like this little poke through here. I like the fact that the stock has been able to preserve all of these gains. I like the fact that it's been able to get through this horizontal resistance. It's been a sleepy stock for a long time. It's starting to wake up. There's some interest in eBay. I don't know what they're doing, but they're doing it right. And institutions are in there buying, and we're seeing a little bit of volume come in. Wait for that relative strength to come in. eBay is another one that you can consider. So Target and eBay, I like both of those. MRO, you got to get a little bit of a pullback. And so right now I'm going to conclude with one thing, and that is I'm going to go in and right click, create alert. I'm going to select LRSI, and I'm going to select a 15-minute basis, and I want LRSI above 20. It's currently above 20, so that means that it's going to have to go below 20 and then above 20 for me to get this alert. And when I do, I'm going to be looking for all those things that I just told you about. Happy Easter, everyone. We will see you Wednesday for our live event. Please make sure to check us out then. Trade well.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.